Good day, traders. Welcome to our YouTube channel. Today, we are going to do an Elliot wave analysis focused on the price of Brent crude oil or spot Brent. Okay, but before we get into today's video, I just want to do a short recap on our previous forecast. Remember, in our last video, we're looking at how we can trade the WXY structure. We traded the WXY structure on the prices of USD Canadian dollar. So let's just do a quick recap. Okay, so this was our primary view on US dollar Canada. I was looking at this structure as a W, X, and a Y with a blue box set up here. Okay, so the forecast was for this WXY structure to terminate within the blue box and then make a reversal and shoot to the upside. Okay, let's quickly look at the live chart and see how that has played out. Let's quickly see how that has played out. This is US dollar, Canadian dollar. Okay, so as you can see, the price did trade into the blue box with this W, X, and Y corrective structure. And then from the blue box, we had this reversal here, starting with a leading diagonal. We had a leading diagonal 1, 2, 3, 4, and 5, and then a correction. So this was wave 1. This is wave 2 of the impulsive sequence, and we appear to have what looks like a nest here. This is also wave 1 in the smaller degree. Let's use the green degree. We also have wave 1 and the green minute degree. And then in this region here, we appear to be having a consolidation, 1, 2, 3, 1, 2, 3. We're gonna have again another 1, 2, 3, possibly up to these levels before the price shoots up. Remember, the price never moves in a straight line, but overall, the focus is still to the upside. So those who took the trade from the blue box area here are already in profits. Okay, this appears to be, it has moved for around 203 pips so far, and we are still expecting more upside, or we're still very bullish on USD Canadian dollar. Okay, so let's get back to Brent crude oil. So if we look at Brent crude oil from these lows of around December 2021 here to these highs of around March 2022, the market appears to have gone up in an impulsive wave, right? And what we are currently having here is a corrective structure. Now, what kind of corrective structure do we have here? This is a complex corrective structure. This is a complex corrective structure, which means it is made up of more than just one simple corrective pattern. Now, it is our duty to analyze this structure here and to anticipate when it's going to terminate and around where it's going to terminate. All of this that we see here is a corrective pattern that is in the forming. We want to be able to anticipate when and where this pattern is likely going to complete. Okay, so we are going to be talking about cycles and degrees. Okay, so as I'm looking at this pattern, we can see here what appears to be a flat correction. We can see here what appears to be a flat correction with 1, 2, and 3 waves, right? Is it an ABC? Is it a WXY? One could say that this is one wave, 2, 3, and this is wave 1, wave 2, and wave 3. This here also is a wave 1, wave 2, and wave 3. So we can see that our structure is more or less a 3, 3, 3 corrective pattern. Remember, we said if we have a 3, 3, 3 corrective pattern, we label it as a W, X, and Y. Otherwise, it's going to be an A, B, C corrective pattern. And this is a 5, 3, 5 structure. Okay, so in this cycle here that has already completed, we only seem to have a 3, 3, 3. So I'll label this as a W, an X, and a Y, right? In that degree there, in the red degree. Okay, but we also have this move here. We also have this move here in the blue degree, which has not as yet completed from this low to this point here. Okay, so this is one move to the upside. One could see this whole 3 waves as a single move in the blue degree. All these 3 waves, this WXY is a single move in the blue degree. So if we have that and we have this, now we can anticipate to have this move here to complete that degree there. Okay, and if we look closely, this looks very impulsive. I'm not going to zoom into it. This looks very impulsive. And also the move that appears to be coming here, also, it looks very impulsive. So one could say this is a 5 followed by 3 waves, followed by 5 waves. So in the blue degree, we could look at this as an A, higher degree, a B, and now we are waiting for a C, right? That is just completing the blue degree. But remember, this move started from the top here. So let's also look at a higher degree. Perhaps this time we're going to use black. Okay, let's go to the black degree. In the black, we have this one wave to the downside, followed by these 3 waves in the blue. So in the black degree, this could just be one move to the upside, and then we will then wait or anticipate for a move to the downside. And also, if you look at this move here, is pretty much impulsive, 1, 2, 3, 4, 5. So we can also label this as an A, black degree, and then all these waves can be a B in the black degree. This could be wave B, and this is our wave C. Now we can see that this correction, or rather should I say, this whole swing here, let me use a different color, purple degree. This whole swing is an impulse followed by this correction here, which we anticipate to be ending somewhere around these levels. And then thereafter, we are going to anticipate another impulse to the upside. So I know the market never moves in a straight line. The market never moves in a straight line, but as far as the cycles and the degrees are concerned, we can forecast the market using the Elliot wave theory. Okay, so this forecast that we have done here, it could take like years to complete, but either way, we know that the cycles are, and the sequences are just going to be completed just how we have forecasted them. Okay, so I'm just going to take out all these drawings and then label our structure neatly. And then let me just take all of that, and all of that. Okay. So with that knowledge, all right, first let's label our structures neatly, correctly. Let's start with the WXY in the middle, W, X, and Y, right? WXY, don't show the wave. Okay, so we have that WXY, right? And then if we check here, we can see that the market has made a sharp reversal around this area here. So I'm assuming, or I'm of the primary view that our wave Y has ended at these levels here, and thereafter I'm waiting for the market to make that move to the upside. As you can see, I've already positioned myself for this trade, just waiting for this consolidation to complete, and thereafter, after this correction here has completed, we can then expect further upside. In any case, this is my invalidation level. This line here is my invalidation level, because if I'm saying my wave Y has completed at this point, I don't expect the price to come down and trade lower than this point. Otherwise, it is going to invalidate this count, and it means that the wave Y would not have completed at that point there. Okay, so we have that WXY structure. Next, we say this is an A, a B, and a C. Okay, so these are flat corrections. We can't really focus them using fib levels as we did with the zigzag, but it can give us a good picture of when to expect those structures to have completed. Okay. So let's go to the, why don't we make this degree the green degree? Okay, let's have that as a green degree so that we can have the bigger structure as a blue degree. So we say this one is going to be an A, B, C. So that's your A, blue degree. This is your B, blue degree. And now we are waiting for a wave C to complete that blue degree there. Okay, let me put it there, down there. And then don't show the wave. Okay, so this degree is 1 degree higher than this WXY. The green degree is under the blue degree. Okay, now we have also another corrective structure, which is 1 degree above this one. Or let me just check. So this is the minor degree. So we have this intermediate degree here above the minor degree, which is also an ABC corrective structure. Okay, that would be another A, and all of this would be B, and then would be expecting a C somewhere there. Okay, let me just show that wave. And then this is an intermediate degree, 1 degree higher than the previous one. Okay, so if you can see, this is our A. Our B has not yet completed. We are anticipating that the B is going to complete somewhere there, and then we can have our wave C. Now, this appears to be somewhat like a zigzag. It's not a flat correction like these ones we have here. This is more or less like a zigzag. So we can actually forecast when this move is more likely to terminate. If we pull our fib levels, we know that this wave is likely to terminate between the 100% and the 1.23 or 1:1 extension of wave A, or 1.23%. Okay, so we can have our blue box between the 1 and the 1.23. But also remember, the market can even come and test the 1.382%. But in any case, it should not, go beyond the 1.618%. This level here is a critical level. So we wouldn't expect this correction to terminate anyway here. Otherwise, it is going to invalidate the whole structure. So I normally like to extend my blue box, make it look nice, and come down up to the 1.618%. This is where I know I put my stop loss. And if my price is going to trade anyway below, or even as soon as it touches that 1% level there, an aggressive move would be to take the trade straight away. Okay, let me just clear that up. Just clear that up. Okay. Come here. Okay. Let's have it like that. Okay. So now we can clear this wave. Okay. So there we have our structure, and we even have a blue box. We even have a blue box set up. But remember, these moves are not going to happen overnight, or the market is never going to move in a straight line. So we'll rather trade this one wave at a time. Okay, currently we are in this wave C here. So from here, we would focus that the market is going to go up to complete that wave B. And as soon as we have completion of that wave B, we are going to drop from those levels and down into the blue box. Okay. And down into the blue box. So there is our forecast. I hope you're going to be able to take advantage of that, especially that move to the upside, and then followed by that move into the blue box. And then from the blue box area, we are going to be anticipating a reversal to the upside. Okay, so I'm already in this trade to the upside. We're just gonna trade it up to somewhere around these levels here. Okay, I'm just gonna trade it to somewhere around these levels, and this looks like how many pips to the upside? That's 28,148 points to the upside. And as for our stop loss, the stop loss is just 6,319 points. So you can see that this is a low risk trade with a potential of a lot of gains. Okay, this is more or less like a 1:4. The risk to reward is above 1:4. So that is a good trade. That is a good trade. Okay, enjoy your trading week, guys. I hope we all trade responsibly. This is all I had for you today. Until the next video, stay safe. Cheers and bye-bye.